Panda. I got broads in Atlanta. Just took the lean in the family. Credit cards and the scammers. Getting no licks in the band. Legacies.
Everyone, welcome back to my channel. This is Mohit Kakkar. So this video is more about some of the open questions that you have sent me on WhatsApp. So since they were so huge in numbers, I cannot really answer all of them one by one. So I hope this video will clarify all of them if I have not missed any. So today's market was very easy, right? I just went on up and up. I did not to explain in detail what happened today, but as is, you can clearly see, right? Higher high, higher lows, higher high, higher lows, higher. It can just close at the day high. So very easy. It kept trading up, above the VWAPs, moving averages, super trend, etc. Anything just was screaming a buy today. But one of the question that we got today is why we got an SL hit today in the very first trade. That's understandable when very easily explainable as well. So one thing is I want to emphasize again is that first you should read all the notes. Okay, so the third point clearly said try to take all the trades after 10 p.m. because the data gets built till 9:30, 9:45, right? So this trade we got triggered is around 9:30. The data still get built, so you can sometimes you'll miss out on opportunities, but that's fine. But let's take, if you really want to take the trades with the help of data, then really wait for the data to get settled. Okay, another question was around uh, where should my SL be? So SL you can keep as the 20% of the premium if that's convenient. Otherwise, the sheet itself kicks the trade out. So, for example, in just after 10-15 minutes, there was no signal generated for the next couple of minutes. Okay, next 10-15 minutes, and then on 9:55 itself, the next trade came in, which went on very good, ended up around 8.5k profit, and it didn't kick you out anywhere. Okay, so where your SL should be, it's clarified. One of the questions should be, where should I exit? Shall I just keep looking at this sheet the whole day, and should I exit wherever it tells me to? So for example, today it didn't tell to exit anywhere. So I'll say wherever your targets are achieved, wherever you just put a normal pivot standard pivot point indicator. Wherever you see R1, R2 level, you can book profit even there, right? If you get a dip, you want to re-enter, you can re-enter. If you want to continue with this sheet itself, not miss on profit days like these, 8.5k, right? Not every day you get these trades. So you should you can look at this sheet and continue if you are really have that kind of a screen time, or intraday trader you can look at this as well. This is all supporting things for you, shared with free in good intention. That's it. No, just a reminder of the disclaimer. I'm not really responsible for anyone's trade. This is in good intention, shared as a learning content. That's all. Okay. So yeah, another thing was around why we see short build up on the call side, and we also see the interpretation as a short build up on the put side. Is this wrong? People are saying no, absolutely not. So if you see, even in the chart, if you go and see, right, it was a sideways. So whenever you see short build up on both the sides, that means people are trying to sell, call, and put aggressively at that moment. So it's a sideways market. If you go and see the chart as well, in the morning, in the first, it opened really very close on the point where it closed on 14th October, the Friday. So it was like a doji, then up, then Amari Buzu down kind of, and then finally an hammer, right? So why we got an put also trade triggered is, like, you see this hammer, it went below the previous day low. The current day low of 13,147 is below the previous day low, correct? So this is one of the reason why our sheets also this looks at the data point and gives a put buy, although it went on and it was a false trade which couldn't be avoided today, but the reverse side of the trade was beautiful. All right, So that, I mean, coming back to the question, you see a very sideways market. Everybody wants to take benefit of uh, the 2 days holidays weekend theta decay, and everybody wants to get the IV crush as well. So there is a very famous strategy that almost a lot of Twitter trader does is 920 straddle. They want to just come and put their straddle right where at the ATM is on the 920 or the open strike, and just in 20 or 30 minutes when there is IV cool off, they get out. Many people do that. It's a very famous strategy. So this is what is happening as well. So there is a big hoo halla fight in the very first few minutes. People are not sure it's going up or down. Everybody is guessing with the hammer. Everything gets sorted out, and we see an up market. All right. So it took some SLs for not just us, it was a lot of people today. Okay. So that's an explanation on why we see short build-up and on both sides, and it's not wrong. Even in the sideways market, you'll see such things. So today was not a sideways market; only a couple of minutes worth of sideways. You don't see. Then the whole day you kind of see the calls are being added, and the puts are being written. Okay, so if it is an uptrending market, that means if the puts are written, then puts are written where? And if the calls are written, then the calls are if getting longs, then that means if someone had sold calls, they are also trying to get out. And other way around also, the intraday players also who are option buyers, they are also buying calls. The writer also getting out. So they all, if they sold, they now need to buy. So this way to understand this is another question one had put me from your data point where to see where what exact is happening in the down table in the tables below. So I'm just skipping some content that I wanted to, but right here you will see this is the table where you see the maximum OI addition. So 39,000 put. Everybody is pressing the sell button hard on it, right? 162% as compared to Friday is the change in open interest. That means everybody is writing bad. They're writing it bad, killing it. And 39,500 call, everybody wants to get out. Okay, you see there is a almost 40% of whatever people were around, open interest was around. They really want to get out of it. We can check from chart as well, right? If the market was up, so this is 39,500. Although our trade was 39,400. So this is the round number strike where the maximum OI is typically, and this is where the maximum unwinding will also happen when it will happen, right? So this is a moving average 20 period, and this is the open green one is the open interest. So you'll see from 10 a.m. onwards, our signal came at 9:55, but from 10 a.m. onwards, there is a crossover. Rather at 10:05 the crossover completed. 10 did not. So 10:05 onwards, the open interest kept on going down till the day end, traded below the moving average. Meaning people are whosoever has written this call on Friday now want to exit. So this is also propelling the market. If they have sold, now they need to buy is propelling. Other is the put writers who are pushing it up, and other are the option buyers who are actually buying calls today. So this is what push the market up. So this is also one question I had is to explain these tables. There people are new to the sheet. Are they question was should we also look at all this? So you can if you want to study analyze markets, you can. It is like an appendix. A project is created with an appendix, a lot of appendix towards the end. Additional information, good to know, good to see, good to study, improve your learning is just for that purpose. Okay, so I'll just explain this. One was question was what is bull percentage? So bull percentage is whatever activity of trading, the buying and selling happened today, where at this current moment, right now the market is closed, but if you say let's say you look at it at 1 p.m. and this is right Bank of Baroda. if Bank of Baroda is at 90 something percent, okay, Bank of Baroda is not a very big heavyweight. Let's say ICICI and SDIC are near above the 90s. That means there is a very strong bullishness in the market. If it closes at 100%, that means the close is equal to the high. If the if it closes at 0%, that means the close is at the low. So this keeps on updating real time. So this will give you an understanding where each and every individual stock is positioned during the live market. So this is one insight you can take, and all this, you should always look at the heavyweights when you trade Bank Nifty. Stocks like AU Small Finance Bank, IDFC, they don't matter a lot. Okay, this is contribution. Okay, so if Bank Nifty, let's say, move 500 600 points up today, so how much each and every stock contributed to it, you'll see the stocks like ICICI Bank, if you added it with the SBI Bank, they alone plus Axis Bank, the three banks which are in the heavyweights category, after HDFC Bank, they alone pushed 400 points up, right? 175 plus 140 plus 90 something is equivalent to 400 approximately. So these three banks, if you keep an eye, this is also a very helpful insight that you can take from the data. That advanced to decline is very easy, right? But if everything is advanced, you want to see where what heavyweights are doing. So let me go to the chart as well for a minute. So here you can also see this. This is my personal indicator. So the score is 77. These are all like technical values. Our sheet does not include any indicator, let me tell you. But this is all based upon all indicators: Bollinger Band, ADX, MACD, RSI, Supertrend, William Allocators, VWAP, blah blah blah, all of that. So the score is 77 at this moment where it is closing the market right now. So it is a bullish market. So it gives you an overall idea of it. So whatever it is here, you can see on the top as well. Everything is advanced. Most of the stocks are above the previous day high. Some stocks, okay, are there inside the previous day still. Okay, everything is trading above the pivot. Everything is above here 50 EMA on a 5 minutes time period. Okay, so it gives, if you can't make money today, it is very difficult if you want to make money intraday. It's a very easy market today, I'll call it. Okay, maybe I'm over saying things. Next is like very easy data points to read. What is the total open interest? The PCR, put to call ratio of the total open interest. So this is what was the OI on PCR, open interest put to call ratio previous day, and total change in open interest. So this is important. So whatever activity is happening, that means puts are 7 times having interest in market today as compared to the call. So that straight away means, right, puts are written heavily. People are pressing the put. This has to be looked from an option writer standpoint, because that's where huge money is involved, huge margins are involved, not from an option buyer who pays the premium to trade, right? So what is next? These tables I've already explained. There is an interpretation as well if someone don't want to go into deep mathematics of the things. Whatever you saw on indicator, things are available here as well. RSI, MACD, everything, moving averages, ATR, all of these stochastic pivot points, everything is available here as well. So this is US market. If you want to see, look at how the US market is also supporting during the day. Right now the markets are up. This live data that comes in the sheet, they're almost trading about 1.5 to 2% up. So that is something also you can see. So these are skew charts. So what are skew charts? This tells which side activity is more skewed towards, the put side or the call side. The left side is a put, right side is the call. Sometimes the skew is like left skewed, sometimes the skew is like very right skewed. So right now what you see in OTM, deep OTM, equivalent distant put is like trading at 40, and an equivalent distance call is trading as 14 rupees. So there is a like 3 times premium difference. Of course, puts always trade a little in premium as compared to call, but not this much. So if you see such observations, it gives tremendous, not I mean I'll say it gives amazing opportunities to enter uh, ratio trades, which I typically do. Okay, so this is OTM writing skew. I hope this LTM premium skew was under. I mean, there was an open question around these charts. Okay, so LTP stands for last traded price, premium stands for the option premium, skew stands for these the kind of the nature of the curves of these things. So just try and understand why this put is trading so heavy. Have people really, if the market went up, the put should be really cheap, right, today? But still, this is 14, that is like from 14 or 19. It's because people are also bought it for margin benefit, right? People, if they are selling the put at the money to make where the maximum money is made, they need the margin benefit as well, 1500 or 2000 points strike away. There's no more leverage available. So they need, the only leverage available is the hedging benefit now. So that's what big people do. OTM writing skew is out of the money. The change, the writing that it has happened, you will see the puts are almost written badly. So there is huge, this at the money put is like down minus 400 points today. Whereas these at the money calls is like up 200 points away. So if you see such kind of a day, such kind of a skew, that means puts are being written, and I am a typically an option seller, so I'm more interested on which side the sellers are pressing their buttons during the day. If it changes during the day, you need to also change during the day. The sheet also changes during the day, so it not every day will not be like today, which is very easy. Okay, so since it is a good day to explain the sheet, because the data is so much cleaner, market was so much trending, so that is why I'm making this video to also from a learning standpoint help resolve all your questions that I really cannot answer one by one, so many of them. All right, so this table at the top is more from an expiry standpoint, where right, you see the 722 is 39,900 call and put. So these are calls, and in the columns these are puts. So each and every combination, how much is the premium? So this is more applicable on a Thursday. So if I want to enter a strangle right now, 1,000 point a white strangle, which is 40,400 and 39,400. So 328 is the current prevailing premium in 1,000 point strangle. So from the ATM standpoint, 39,900 is 500 away from 40,400 and 39,400. So 500 plus 328 is equal to 828. So that is the one side break even, or the one side cushion I have, assuming I do not adjust or do not do anything. So this is a ready reckoner based upon your market sense and the directional sense for an expiry standpoint, that which all combination is giving you the best premium. So this comes a little more analysis if you do from an intraday expiry day trading, it will be very helpful. So this is still where the open was, where the market is right now, what are the current prevailing premiums. Option chain is very simple. You'll see even in the tools like Opstra, here is the total open interest, intraday change in open interest charts. It's available in Sensible, Opstra, many websites. And here it is, what was the gray ones is the ATM strike, where is my maximum open interest, where typically we call by OI data. Here the reversal might happen because here is the maximum open interest, a general theory in the market which often fails as well. So 40,000 is a round number strike. Maximum OI is obviously over here. People are assuming it'll be held until unless there is a huge gap up tomorrow. Next highest OI is at 41,000 and the third highest is around 40,500. Similarly at the put side as well, you'll see maximum OI is here. Likewise, the maximum change in OI is also here, which we discussed earlier. Like everybody was selling 39,000 puts today. So and this is their current trading prices. Very simple. So I think I've explained all these data points because there were questions around what these data points are. Should we look at it? Should we only look at this table? Yeah, another question was around which one should we look? This is one signal option buy signal, and what is constant option and constant option sell. So you need to look at the constant option buy if you're option buyer. If you need to look at the constant option sell signal if you're an option seller. These two is for signal generation. You'll see this ATM strike keep updating, right? 39,200, 39,700, 39,800. So based upon the current market, it'll keep telling you 40,000, right? So it's just for, you can say it for my own understanding, but for you, this is what is applicable from column CF to CI and column AJ where the M score is. Just to reiterate, M score is based upon a lot of data points, no indicator at all. So it is just purely from option chain, futures, and the volume data point, and India VIX, even Dow, and things like USD INR. Each and every data point that makes sense to give a directional sense of where market might be heading. The score is based upon that. Okay, do not confuse it with this score that you just saw, which is purely on the indicator basis. This is separate. So because indicators I can get live, I can code it, so I'm trading it here. But the option data we need to get it from NSE, right? And it is not real time. It is 3-minute delayed from NSE. So obviously something which is live I will give more weightage to. So that is why price action is first, then like the hammer candle we say is the first indicator, or sorry, the first indication during the day to go long. Second is the indicator with whatever setup I use. You can see it on the screen right away, right? Need not to explain a lot. Third is the data for confirmation. So when you do with all these three things in combination, the probability of your success in a long term will be much higher. So with this, I'll like to close the video and not like to extend. I hope I answered a lot of repeat queries, and a lot of things were raised. I mean, a lot of good questions were also raised. So thank you for all these questions. It also helps others to learn not just this sheet. I mean, this sheet is something just an piece of work from my side, but the inference of data point inference and how to use those inferences to make a judgment, make a confident trading decision is important. So this is the whole purpose of this video, to answer your question as well as to make you come at the same page with me with this reading of this sheet. Okay, so this whole purpose is to complement the first video where I just introduced this. Did not go into deep each and every cell, what it means, how you should look, what you should not look, when you should trade. Right. So this is the whole purpose. If you like the video, just hit the like button. I don't know. I don't intend to make my videos viral, so it's just a learning content. If you like, just be connected on WhatsApp. I like talking to my trader community guys and also girls. So thank you for all the love and support. I saw good comments on the previous video, so thank you for whosoever commented. Really, I really liked all of them, and all of those who sent good positive messages on WhatsApp. So this is just very encouraging for me. So thank you very much. Bye bye.